All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Interesting open here for the market this morning, and coming off of a fairly active overnight when it comes to S&P futures. In fact, I could pull it up here. S&P futures kind of were up about 6-7 points here a few hours after the market closed, and then we saw this kind of drop here, and about a 20-point drop from the highs, and this happened as some images started coming out of Hong Kong with some of the civil unrest that's happening there, and just all of that. Which let's face it, 5-10 years ago, that would have been worth a 40-point, 60-point, 80-point drop in the market. But as time has gone by, unfortunately, and I think it's a very sad commentary on where we are, but the market's just gotten used to those types of things, and they understand, hey, it's a short-term thing, it's not a long-term thing, it's not going to affect things, in the ultra-long term. And yes, it's a significant event, and yes, it's something that has human consequences. But in terms of having market consequences, no, not so much. And that's just where we are today. That is just where we are today. Whether we like it or not, it is it is a simple fact of life. And you can see, it just got bought up relatively quickly. Then we had Europe open, and we saw futures go back into the green, and they've kind of stayed up here since. But that wasn't the big thing last night. The bigger thing last night was oil. And you see this oil just whoosh, real big rise here. We talked about this a few weeks ago, how things were starting to heat up in the Gulf of Oman. And I'll pull up the picture again here. But this is where a lot of the oil traffic, from around the world goes. And here we are. I'm just pulling up a random image here. Let's see. That is not a good. Here we go. Maybe. Here we go. But you can see this is the Middle East, and this is Kuwait, Iraq up here, Iran right here, and then we have Bahrain, Qatar, UAE, Oman, and the Gulf of Oman is right here. Well, what's significant about this is, a lot of the world's oil flows through here on oil tankers. And it is something where, these boats are very close to the Iranian borders, very close to the Oman borders. It is just we have a lot of oil coming out of Saudi Arabia that goes through here, out of Kuwait that goes through here. So it's a very high traffic area. And a few months ago, Iran kind of threatened the region, saying, hey, you know what, we might, do something here. And it's just a simple ploy to raise oil prices. And, we saw oil prices tank yesterday. We saw them push lower as we saw U.S. inventory data, and we saw the U.S. production data, and the U.S. is producing more than ever. The inventories are growing, and, it's pushing the oil pricing down. And you can see oil prices have jumped here today, basically on the, on the news of the bombing here, or bombing's not the right word. Let me get the right word. The right word, the attack on, to oil tankers. Here's some images. Here, I'll just pull up the images site here. But you can kind of see what they look like. The ships are not in danger of sinking here. And, so far I haven't heard of anybody taking, full credit here with it. But, it's one where, it's one where it's going to, increase, tensions. I think it's fairly obvious that the Iranians are behind it. But, it's one where we see, we see a lot of different possibilities, because let's face it, everyone in that region has incentive to create this type of thing. right? They all have incentive. Iran, Saudi Arabia, Kuwait, they all have incentive to try to drive oil prices higher. And if they can just kind of do a little bit of, sabotage on a vessel and drive it up higher, it's yeah, I mean, I don't want to kind of speak out of turn there and of something that isn't happening, but that's what we saw going on last night, and that has pushed oil prices back up into the $52, $53 area, and that's kind of the bigger news. Bottom line is, unless something really comes out of that, unless we see some real, major change in behavior out of that, it's not going to matter all that much. It is something where Iran doesn't have much to lose, and it's something where it's not the only region where there's stuff going on. And right now, kind of the world's waiting to hear what Russia has to say about their production cuts. We have U.S. President Trump getting involved with the Russian to Germany gas pipeline. There's just a lot of stuff out there and a million different ways that it could all unfold there. Okay. So anyway, those are two of the big things that went on here last night in terms of just price action and global events there. Now let's go take a look at the challenge. The challenge is in one position right now. That's on Verizon. There are no new signals here this morning. I'll show you Twitter. Twitter, if it were the afternoon, it would be a trigger. But, I say that with 90% certainty. I don't know for 100% because it has to go through, it goes through the algorithm, and I can't, input all those variables. But, it is one where, no new signals here this morning. We've talked about that, just some of the chop, and I'll address it here just a little bit. So let's go take a look at Verizon. We did buy some Verizon calls yesterday as we got a bullish signal here on Verizon. Let's see, the option on Verizon right now is $2.26 with the stock up about 30 cents, so $2.26 here. Gives us about a $300 gain. So really just hasn't even gotten started, not even out of the gate here yet when it comes to Verizon. But we're still $1.70 away from the profit level and $1.60 away from the stop level. So, $1.50 from the stop level. So, nothing to adjust, nothing to change here with Verizon, and nothing new to enter here this morning. Now, there are some 3.7 crossovers out there. If we take a look at Arconic, maybe. If I could type in the signal or the ticker correctly here. But we have Arconic, and this has a downside 3.7 crossover on it. It's happening on a day where the stock's actually a little bit up, which we don't see very often, but does happen just with the, when we see kind of movement, kind of V-shaped type movement, but it's not a signal. It's not signaling a new downside trend in the same way that a lot of these other 3.7 crossovers to the downside here in May and even back here in March and April didn't signal new downside trend. So not a bear signal there. I mentioned Twitter. Twitter has a downside 3.7 crossover here on it today. You can see the Stochh 39.1 pushing below 50. This is a very interesting chart. It's already filled the gap and bounced. I was a little surprised we didn't get a bull signal on the 3.7 cross up, but coming off a new short-term low, I shouldn't be all that surprised. But we could have a bear signal coming in here with Twitter a little bit later today, but does have that 3.7 crossover. The consolidation risk component is just pretty high. ConocoPhillips has a 3.7 crossover on it, but this thing's trading at lows. It's not going to trigger bullish here. And then Vulcan Materials has a downside had a downside 3.7 crossover yesterday. Today has an upside 3.7 crossover, and it's just one where the consolidation risk is very high. So we didn't see a signal yesterday. So that leads me into, the part of the title that I put in here. Is Jeff not showing all the triggers when it comes to the challenge? This is something that I was asked 2 days ago, and I said I would address it. So I'm going to address it here this morning. And I don't mean anything disparaging. I don't mean anything, condescending. I don't mean anything negative about this. The person who asked me this question has been a longtime member, and we've had some banter back and forth over the years. So it's it's all in good spirits there. But I brought up a question that I would not be surprised if others are asking. Is Jeff not showing all the triggers here for the algorithm? The short answer is no, I'm not showing all the triggers for the algorithm, right? I'm not showing them all, right? In the Sentry triggers, I'm not showing everything. But I am showing all the triggers for the watch list. There's not a trigger on this watch list that doesn't get shown. Now, we did have the Netflix issue here this week where, Netflix triggered a little bit later in the day. It didn't trigger at the time period that we had. And by the time we got to the next time period, it had moved, just too far to be, a fresh, brand new trigger. And I showed that, very clear, very transparent about it. I have not traded all the signals. For example, Triple D, this triggered bearish. I didn't go trade it because the option was just insane. We talked about that a lot. But every signal that comes in for a stock that's on the watch list absolutely gets posted. And that's going to continue. And that won't change. I don't sit there and go, well, you know what? Here's Twitter. It has a signal, but I don't like it, so I'm going to say it's not a signal. No, there's no point in that. There's no incentive for me to do that, especially when we look at when we look at the overall purpose of the challenge and the purpose of creating a consistent model that, yes, it needs a little bit of human intervention, but isn't completely on Jeff for every single trade decision. And what do you think of this? And what do you think of that? And what about this? And what about that? Right? If I'm adding that to it, what's the whole purpose or the whole incentive to build this just kind of goes away. I don't get the benefit, right? And the idea here is to create something that has, that benefit. I'm not going to show the algorithm. I'm not going to show the math behind it. I'm not going to show, all of that stuff. I've been very transparent when it comes to Trader Minute ever since it started, and I'll continue to be transparent. But that doesn't mean I'm going to kind of give away the algorithm here. With how things go and kind of how it reads and what the input variables are and everything else. I mean, that is something that is quite proprietary and something that will continue to be very guarded. But I will share every single signal or every single trigger that comes in with the watch list stocks, and will continue to do so. And let's face it, I don't have to trade every signal, right? And if we come into some of the entry triggers, I didn't trade Arconic. Why? The options just weren't that great. Did Arconic go higher? Yeah, sure did, right? I mean, Arconic, made a very nice move here. Right? Made a similar move to what Disney did and what some of the other stocks that triggered at the same time did. But what we would have made on the option is fractions, is peanuts compared to what we made on Disney and what we made on Visa. Right? So the option just didn't make much sense. But, trigger here. Same with Triple D. The option didn't make much sense, so I didn't trade it. We have Amazon, which I didn't trade. We didn't have the money to trade it. And then we had Bristol Myers and Raytheon that I didn't trade because, well, we didn't have the cash to do it at that time. Same with Chipotle Mexican Grill. There are plenty of signals in here where, I didn't trade. And on those days, I talk about why. And it either has to do with lack of cash or just an insane option value. Those are the only two reasons. There is no other reason. I wasn't a huge fan of the Visa trade. I kind of said that on video. I probably shouldn't have. But I wasn't a huge fan of the setup here when it came to Visa. But I went out and made the trade. Under Armour, not a comfortable setup for me. I bought a stock that had rallied 70 cents on that day. You know what? My general nature is to say, all right, if we get a little pullback the next morning, I'll look to get in. That's my general nature. But for the challenge, no, it triggered, time to go. If it pulls back a little bit, so what? Not going to take the risk of missing. So not a super comfortable trade, here for me. And the challenge, kind of, takes away, or the algorithm takes away some of that, some of that variation that can come in. And, I go out and make the trade. But when we go and we look at some things like Halliburton yesterday, right? Halliburton had a downside 3-7 cross on it. I would love for it to be a signal and to be able to go and trade it and trade it down to 15. It just wasn't. The consolidation risk factor part of it was just too high. Micron, same thing. Just same thing. Boeing, same thing. Consolidation risk factor just too high on it. And then with Bristol Myers to the upside yesterday, we had a beautiful 3-7 crossover. I showed the chart, the kind of little bit of a breakout. But when I go and look at the algorithm, it says no. Right? It says no. And so I said, okay, I can't trade this for the challenge, even though I may like the setup, and I kind of like it still now. But, for the algorithm, I can't, I can't go make that trade here for the challenge. So, it's one of those where, no, I'm not showing all the triggers because we are looking at other stocks, in the market, how they kind of go with this, with this whole algorithm process and what their performances are, and some real-time action, real-time testing. But of the stocks that are on the watch list here, I am absolutely showing every single signal that comes into play. In fact, the biggest complaint I get is, why aren't there more signals? I want more signals, right? So I don't really have much incentive to not show signals, right? It's one of those where, man, I wish I could show more. And look, I mean, the reason I expanded the watch list is to try to get to that 3 to 5 signals a week. We're just running under that, right? I'm not too surprised of that because the May, June, July, August time period tends to be a little bit lighter in signals than the October, November, December, January, February, March period. But, it's one where, I'll take what the market gives and look and run here with that. Okay. So anyway, that's, am I showing all the triggers? Yeah. For the challenge watch list. Absolutely, and I just don't have incentive to not, show the triggers, and it's one where we can look back and go, well, you know what? Why didn't Walmart trigger, right? And this is one that I have looked at over and over because it had everything, and I even talked about it as it was breaking out. It had everything I want to see, and what I've kind of built the algorithm to drive at and to get at, and it didn't trigger. And yeah, I mean, the stocks performed very, very well, since I thought it should trigger right here on this day. But, it's just one of those where I would have to make some tweaks to the algorithm, and sometimes, the stock's going to trend without a trigger. And I know that, and I know that sometimes the stock is going to trigger and then not trend. Right, we know that that possibility is in play as well, but everything's been built here to play the odds and to play the probabilities, and we'll continue to do that. Okay. Alrighty. So anyway, that's all I'm going to say on that matter here, and yeah, move on here from that. Okay, but market here this morning, just not a lot in it. Unless you're day trading and jumping in and out and everything on 5 and 6 point moves, there's just not a lot in it here early on this morning. There's not a lot in the metrics, not a lot in the internals. We have a few upgrades or downgrades driving a couple stocks. Disney, beautiful upgrade on it this morning. I posted it into the message feed here. I'd love to get back into Disney for the challenge, but didn't pull back enough to then now give a fresh 3-7 crossover, here today. So, not sitting in a signal area here with Disney. We saw General Electric, and maybe to say upgrade's not the right word, but some very positive analyst commentary out of William Blair, who's already bullish on the stock, and talked about the stock moving into the $14 to $16 area when it comes to General Electric and being a strong outperformer going forward. I do think we'll have to see an earnings report to be able to kind of say that, but this is a company, this is a stock who, there was a big bearish analyst, Tisa from J.P. Morgan, and there's some reports, and there's going to be some continued ongoing investigation into him and to insider knowledge and what he had access to that many others didn't have access to or shouldn't have had access to. So it'll leave him sidelined a little bit, and I think he's been the biggest proponent for the Bears, and the Bears losing that element that kind of Tusa put that they had, they're less likely to stick in and stay with General Electric on the downside. We haven't seen any real kind of upside breakout type volumes. This is a fairly bullish consolidation that it's gone through, but been in quite a range. But this is one worth keeping an eye on, definitely for a breakout. It is not on the challenge watch list, right? And so it's not something I'll be trading for the challenge. But something that this morning I looked at possibly entering here this morning. Looked at some different plays on it. I decided not to. I decided I'd wait a little bit longer here. I struggle to buy companies on the day of upgrades. It just do. The options inflate a little bit, and normally you get a better price a day or two later. So I'll be looking at GE, in a couple days to see if there's some sort of play that I can go and make on it. Thanks for hopping on. Have yourselves a fantastic day. I'll talk to you this afternoon. Take care.